Here we go. Okay, that's better. Hey everyone, it's Mitch Goldberg. It's time for Be the Boss of Your Money. You know it's 4:30 Monday through Thursday. It's time for your post-market show, a live stream about the stock market, what's going on, and I tie it all in together between investing, personal finance, making smart money moves. We throw in politics, we throw in policy, we put it all together to help you really take control of your money. That's why I call this show Be the Boss of Your Money. I know Be the Boss of Your Money is a little hokey, but anyway, let's get the intro going. We're going to talk about what happened last Friday, why the market tanked, what's going on now, what you should expect, and why I've got a little prediction that I'm going to make, a real prediction in about 30 seconds. So here's the intro. Get ready. It's going to be good. Hey, it's great to have you here. I'm Mitch Goldberg. We're just getting started. Prediction. The big prediction. I predict that if and really when we start seeing Omicron cases in the United States, my prediction, it doesn't do anything bad to the stock market. Yeah, that's my prediction. We see cases go up, whatever. We've got tens of thousands of cases all the time of Delta. So we have this new one. Let me tell you something. This is not February and March of 2020, not by a long shot, but that's exactly what people were afraid of last Friday. It was a hell of a day for me to be out, but I promised myself I'm taking off the Friday after Thanksgiving. And I always say, I should take off, whatever, nothing's going to happen. Nothing ever happens the day after Thanksgiving, like nothing. And, sure enough, sure as shit, the stock market tanked 2.5%. And I'm like, maybe I should go to the office and do a quick live stream update. And I'm like, yeah, it's going to be all over the news. Everybody's going to be seeing it, doing their Black Friday shopping and all that good stuff. So I didn't do the live stream, but I was tempted to. If you have any questions, by the way, hit me up in the comments while you're watching this. Please give it a thumbs up, a heart, an applause, celebrate, whatever, depending on what platform you're watching from. Stacy, I see you out there. Thank you so much. By the way, did you know that I am now connected with Jason on LinkedIn? I'm very happy to say. So thumbs up to that. And I'm really sorry to hear about your dog, Jazzy. So very, very sad thing. So I want to keep us in the zone here. What happened with the market? What's going on? Why am I not disturbed or perturbed or even bothered by what happened on Friday in the market? Look, I once made a post when the Dow was down about 700 points, which was before Friday was the worst day of the year for the major averages. And I wrote, things I do when the market goes down 700 points, nothing. And then I wrote things that I do differently, and things that I do differently when the market goes up 700 points, when the Dow goes up, still nothing. I don't make my investing decisions based on how the major averages did on any one day. And I know a lot of people are debating this. It's like this life or death challenge. People are putting themselves through the stress of deciding, should you have bought on Fridays? Like, is it a buying opportunity? No. Is it a selling opportunity? Is it just a hold opportunity? What's going on? It really depends on your situation, but make your investing decisions based on your personal finance. Instead of trying to make this binary decision, should you have bought on Friday? Oh, I knew, today the market's up a little, and someone's going to say, oh, I knew it would be up on Monday. And then the market will go down tomorrow and somebody will say, I knew that was a head fake and we should have bought. You really don't know. And you know what? Believe it or not knowing what's going to happen tomorrow is actually not important. Okay? It's not, when it comes to investing, it means nothing. Make your decisions based on your personal finance. If you need money that's in the market if you need that money for your near-term financial obligations, then you want to sell enough of your investments to raise the cash for those financial obligations. You want to do it well in advance. Today, Friday rather, was just another stark reminder of many that we've had. And let's talk about this here, because the high for the Dow is 36,500 heading into Friday sell-off. Maybe we didn't hit the peak the day, the Wednesday before Thanksgiving, but right around there, we're barely off our peak as it is, okay? But about 36,500, so 900-point day is 2.5%. The Dow was probably about, 28,000 really before, 27,000 before COVID sent the stock market into a tailspin in early 2020. So 900 points back then was a much bigger deal. Okay. At 36, you have to realize, if the market is at 36,000, 360 points used to sound like a lot, but now it's only 1%. And I know if we see the market go down 1% every day, we'll eventually be down to zero. If that's what you're afraid of, you're probably not thinking about investing the right way. And if you have to know what the stock market is going to do tomorrow, maybe you need to reconsider if you should even be an investor. You should not need to know what's going to happen tomorrow or next week or next month or next year to be an investor. An investor is about patience. It's about not making hasty decisions. That's what investing is about. It's not about, I know it's going to happen tomorrow, so I'm going to buy tomorrow and sell an hour later. Now, there are some people who do that professionally, and there's some people who do that with some of their money. They're called traders. I'm not knocking anybody who trades, but for your serious money, this is a non-event. Okay, so we are heading into an Omicron. I don't know how you pronounce it. Is it Omicron or Omicron? Whatever it is, Omicron. We are not heading into the disaster that we saw in 2020. We are so adept at dealing with a pandemic. We are so good at this. We have vaccines. Okay, something like 2/3 to 70% of all eligible people in this country, or people like 13 and over, are vaxxed. From everything I've seen, the vaccines will still help protect you against Omicron. Their effectiveness in preventing you from becoming COVID positive might not be as good, but in preventing serious illness, hospitalization, and death, it's still very good. We're getting our boosters now. We know how to deal with it. We know how to wear masks. We know how to wash our hands. What you'll see is the same regions of the country, I predict, that are anti-vax will continue to suffer, and the regions of the country where people are careful and vaxxed will probably get through this with a lot of inconvenience, but minimal disaster death reports, if that's a good way to put it. I hope everybody gets through it. That's, an American wants his and her fellow Americans to do well. All right. So my big prediction is that if we see cases of this new variant, Omicron, if we see it, pop up in the United States, my prediction is it doesn't really do anything to the stock market. The real worry is still inflation, and it's still supply chain disruptions. That hasn't gone away, but those are slowly ebbing. We've talked about that so many times on this show. And we covered the Baltic Dry Index. The cost of shipping goods by sea has dropped by half. There are fewer and fewer cargo ships waiting to dock outside the ports of San Diego and LA. Things are getting better. You're not going to notice from day to day, even if all the ports are able to dock today and all the merchandise on all these ships was offloaded onto land, it would still take weeks and months for these goods to spread out throughout the country. So the clearing of the supply chain is going to be a process. You're not going to notice progress on a day to day, week to week basis. It's going to be more like a month to month, quarter to quarter basis, but we'll get there. These are the things that what we really need to be concerned about. Okay. We are in so much better shape this time around with a new variant than before. We're going to get through this, folks. I know I'm sounding a little optimistic. Am I foolishly optimistic? Do I know something that you don't? I can tell you this. I'm a total freaking news junkie. I read every possible thing that I could read over the weekend. My wife is like, Mitch, I think you ran out of stuff to read on the internet. Go to bed already. That's last night. I read everything and I listen to all the experts. And the CEO and chairman of Pfizer was on CNBC this morning saying, we are going to have our pill that should work against this. The Pfizer antiviral pill doesn't have anything to do with heat shock proteins or protein spikes. It doesn't have anything to do with the protein spikes. So he feels that that's their pill is going to work to prevent severe COVID. Moderna, the CEO of Moderna, was on CNBC, and I watched all these interviews, and they were incredible. But he said that the way an mRNA vaccine works, it's plug and play. You take out the genetics, whatever the components of the virus, and you replace it with the parts of the new virus to make the vaccine work. It's plug and play. And now we should have the new vaccines literally in 3 months. You know how fast that is? In any other time in history, that would be record speed. But today, we expect everything to be, same day delivery, including vaccines. But it doesn't work that way. But we're going to have this under control pretty quick, even if we do see a breakout here in the United States. And by the way, people in this country over the age of 50, the vast majority of over 50 and over 60 are vaxxed in this country. The vast majority. So let's keep that in mind. I just want to calm the situation down because I think the sell-off on Friday was a bit overdone. I'm not saying it wasn't due. Now, there are a number of reasons why you could picture the major averages having a sell-off. And some of those reasons include stock markets run up a lot this year. It's up about 25% heading into that sell-off. From late September till about a week ago, we had about a 7% move up in the S&P 500, which, by the way, is that's an index. You can't invest directly into an index, but you could invest in a security that tracks or mimics an index. But we had massive upside performance. So the market was in search of a catalyst. It was looking for an excuse to take some profits. Now, what you saw on Monday was this big rotation, the opposite rotation, I'll call it. We saw this rotation happening in the last year where investors went from work from home, stay at home stocks like Zoom, Peloton, Teladoc. You know the names, you talk about them all the time. Money going into industrials, energy, financials. It's been going on. We talked about this last year that this was going to happen. We talked about this right here on the show many, many times. You had a one-day reversal. I don't trust this reversal because I don't think we're going back to work from home, stay at home. I don't think Zoom, we covered this on the show like 2 weeks ago. We did a whole segment, a whole show on the absolute crushing, the murderous, disastrous performance of Zoom, of Teladoc, of all these work from home, stay at home stocks, how these stocks have been absolutely crushed. So they had a little bit of a reprieve after being down, after maybe some short covering. Stocks bounced a little bit, but no, this does not mean Zoom is going all the way back to its old high and Teladoc goes back to its all-time high, in my opinion. And it doesn't mean we reverse the big rallies we've had in companies, stocks, like Bank of America or Wells Fargo or JP Morgan. We're not going backwards. That's not happening. Um, I just want to put that out there. If you are running into the work from home, stay at home stocks like there's a miracle, with the exception of one, I'm going to give you the exception. That's Moderna, because Moderna really does have a business that thrives off of new, very transmissible variants of coronaviruses. They thrive in that. So whether if the economy gets back to work or not, Moderna is like, it's the only one, and the stock is up about 30% between Friday morning to the close of today. Moderna's up about 30%, which is a huge move for a company that size. Uh, but that's where investors are putting their chips, and it's not up to us to judge it. Okay. All right. So the rotation, I have my notes here. Just want to make sure I cover all our bases. Sometimes I put up a thumbnail of what I'm going to talk about, and I waste too much time getting to the point or talking about something else, and a half hour goes by, and I'm like, holy shit, I didn't even talk about the main point yet, but it's too late. The show's over. All right. So while we're here, though, I want to check out who's with us. Michael is out there. Stacy's out there. Thank you so much. Josh, thank you very much. It was great to see you last week, by the way. And let's check out the comments. Usually I read the comments before I put them up on the screen, but I know Michael Haltman, and I trust Michael. To know Michael is to love Michael. For now, I suppose the markets are somewhat comfortable that Omicron won't shut the economy down. Yes, that is correct. And now President Biden came out today and he gave his speech about what we're going to do. And he said, there's no shutdowns. We're not shutting down again. Corporate America is doing what they can in terms of, Merck and Pfizer and Moderna and other companies that are involved with treating the disease or creating therapeutics for the disease. Nothing with that is changing. The real worry is still inflation, Fed policy. I guess you could say the good thing that came out of this is the price of oil has completely gotten crushed when people said oil's too high and yes is going up. But that's a sign of a good economy with, OPEC holding back production. Okay, OPEC is holding the cards right now, not anyone else. But this, and plus we had, we're going to, Biden is going to release like 50 million barrels of oil from the Strategic Petroleum Reserve. So oil was set up for a big dip, and it went down over 10% on Friday, which is the worst day for oil since, March of 2020. Okay. Looking forward to next time, Mitch. Thank you very much, buddy. Me too. So that's what we're doing right now. That's the thought process of the day. So what do I like about today? I've talked about this a lot of times, and I think it bears repeating. Okay. I've talked about this many times, and it bears repeating. When we have a major down day, and I just so you know, anything under 0.5% up or down in the markets, I look at the markets throughout the day. I don't look at them like every second, but I check on them. It doesn't really grab me, but over 0.5% move in any of the major averages, whether it's the Dow, the NASDAQ, the S&P, Russell 2000, over 0.5% move up or down, it does get my attention. 1% or more definitely has my attention, and I really want to explore that. But when you have 2% plus moves in the major averages, yeah, that is attention getting. But the 2.5, 3% moves up or down in the major averages, it's nothing new. I mean, why were investors so shocked? I mean, aren't you battle hardened? Haven't you been through this with the COVID and variants and bad news? Like between the 2000 tech wreck, the 2007 to 2009 financial wreck, and then the COVID pandemic wreck, and everything we've been through in the last almost 2 years, shouldn't investors be battle hardened by now? Like, I feel like I'm tough as nails. It's really cool, like to be at this point in my career where this stuff just doesn't phase me anymore. It's like, oh, the market's down 900 points. I wasn't climbing a wall. I was like, all right, it's down 900 points. We'll see what to do. I'm not changing anything. I'm not doing anything different. I'm not letting an external force that I cannot control dictate to me any decisions that I'm going to make for myself on behalf of my clients. That is not what we do. Okay. We let our personal finance, our future needs, that guides us, not the market going up or down big in a day. What I like about today is that the Dow is not up a lot. It was up 200 some odd points. We'll go through the stats in a moment. But I don't like days where you have a massive rebound. Like, if the market went down 905 points at Friday and it was up like 700 today, I would be very weary of it because those big up days just get repealed so quickly. They're like built on fluff. I would rather small, incremental, but durable gains going forward in a recovery after a beaten up market rather than a giant up day. Because so many times you see these big up days and then they're given right back, they're repealed. And when that happens a couple of times, it's a little tiresome, it's a little heartbreaking, and it's a little like it just kills it's just a sentiment. It kills investor sentiment. What can I tell you? Big news coming up this week. The big news is on Friday, we have the November non-farm payroll report. That's a huge report. Every month we get the non-farm payroll, and that is the most significant economic statistic there is. I know people follow GDP and people follow corporate earnings. Obviously, corporate earnings is very important to follow. GDP is not as important to follow, in my opinion. Employment figures and inflation figures are everything. And the employment picture has really been brightening. And I know someone out there saying, "Oh, but this Omicron, this new disease, this new COVID variant is going to kill the rise of the labor market." I don't think so. So people wear masks in planes. People will wear their masks off people will wear their masks when they're in a restaurant, and they'll take them off when they get to the table. We know what to do, people. We know what to do. And yes, this could be more contagious, but we also know a lot more about how to handle it. Okay, let's take a look at the major averages. Okay, and let's just give you a quick glance at where everything closed. I want to show you something else. Also, I was quoted in NBC News today. Let me fix that screen. Let me get the overlay off there. Okay, so I was quoted. I'm going to make this a little bit bigger. I spoke with a journalist today at NBC Business News. Can you see that? Let me make that a little bit bigger. Here we go. All right. Let's just highlight this in blue. This is a quote of mine, and this just goes to show you that when I speak in the public and I speak with you and I speak privately, I'm the same. I say the same thing to everybody. Nothing is changing. Okay. Here's what I said to NBC News, and they put it in an NBC News business article today. Most of the time, investors are best off just staying the course. I think some of the fear factors still lingering, Goldberg said, warning that trying to time the market or trading according to day-to-day news cycles can lead to big losses. We're living on a minute-to-minute basis. It's really the worst way to make decisions. Why is that the worst way to make decisions? I'll tell you why. When the stuff hits the fan and the market's plunging and the futures are down 800 points before you even get to work, before the market even opens, and you're wondering, you have a stock that's way up in profits and those profits are starting to disappear. And it's not one stock, it's a lot of stocks. And you're thinking, I got so built up. I'm more into the stock market than I should be. I'm looking for dividends. There's nothing, I'm not getting paid anything in the bank. I can't buy bonds, or interest rates are too low. So I'm all in stocks. And now you're starting to second guess. now you're starting to second guess everything you've ever thought or said. And you've got to move fast. And in the meantime, your life is spinning around. Your phone's ringing off the hook. You're getting emails. Clients are calling. And now, at that moment, you're going to make a decision that could affect you for the rest of your life. It's like, we as humans we are not necessarily the best decision makers, but one thing for sure, we are great at picking the worst time to make a decision. We make decisions when we have to, in times of stress, in times of rapid change, of revolution. That's when we make our decisions. And it's the worst time to make a decision. This is why you need plans, you need contingency plans. This is why you need like your own flow chart of the future. If this happens, I'll do this. If that happens, I'll do that. That's what I'm talking about. And if you're not doing that, it means you're flying by the seat of your pants with your investing decisions. It means you probably sold some stocks on Friday or and you bought them back today, or you just did something that made no sense. Calm it down, boy. Calm down. Okay. Girl, calm down. Okay. So that is that. And let's see. So Biden said he doesn't expect more travel restrictions or lockdowns. Okay, U.S. markets. I'm going to make this bigger, and we're just going to go through a quick rundown of today's action. Share the screen. Pop myself up in the corner. Okay. So Moderna up almost 12%. It was up at 20% on Friday. Lam Research, semiconductor stock. A lot of the stuff that's up today is rebounding, especially the tech stocks. Okay. Tech stocks were the leading sector of the day. Tesla had a nice little bounce up 5%. That's pretty good. It looks like the sell-off, the Elon Musk Twitter enforced sell-off. I don't know if you saw the poll he put out, but looks like that's behind us. Merck got crushed. It's a Dow stock. Had it not been for Merck, the Dow would have been up another, easily another 50, 100 points. John Deere off a little bit, but that stock's been on a tear. See Clorox. Clorox is a pandemic winner. Was up last Friday, and sure enough, it gave it back. Why? Well, we have as much Clorox wipes as we want. Okay. Let's see what else is up there. Crypto. It's a good day for crypto. Crypto got hit hard last Friday. It bounced back. Bitcoin bounced back a lot better than the Dow, than the major stock market averages. Got hit worse also last week, so let's keep that in perspective. But overall, a pretty good day in crypto land, rebound. I find that I follow crypto not because I'm recommending it. I follow crypto because when you see small cap stocks, crypto do well, it means there's energy in the market. Whether or not you want to call it speculative froth is fine with me, okay? But there's energy in the market. And I see you, Asher. Thank you very much for joining in. Hope things are going well at your new venture at Dark Horse. And thank you very much for joining me. So let's keep going and take a look at the winning sectors. And then we're gonna be done in like a minute, okay? But technologies, the tech sector up 2.5%. Consumer discretionary had a good day, and you would expect it to have a good day. They had a crappy day Friday. Friday was Black Friday. You would expect all the retailers to go up, especially consumer discretionary. Coach and all luxury goods. They got hammered, so they rebounded a little bit today. Utilities up a little. What I don't like, the bottom is building materials, financials, industrials, and energy didn't do that great today also. So I don't look at a rebound as something particularly valuable if industrials, financials, energy, and building materials aren't also rebounding. All right, that's my story for the day. I'm sticking with it. I see no one else in the comments, so I think we're done with that. Thank you all for joining me. I'll be back tomorrow. You have yourselves a great evening. Thanks for sticking with me, and let's just keep sticking to the plan. All right, talk to you soon. Have a great rest of the day.